Starting next year, millions of borrowers will lose access to their current student loan repayment plans, whether they like it or not. For some, this means tens of thousands of dollars more being locked into 30-year repayments with the repayment assistance. Imagine logging in and checking your balance only to see your monthly bill has doubled or tripled. In this video, we're going to explain exactly what's happening with the changes, who's affected, and how to protect yourself before the deadline hits. So the structure of this video I'm going to go into is what is changing and why it matters, right? Based on the legislation that was passed, key timelines, what borrowers need to know, the big pictures, cap, cost, access, what repayment assistance means for borrowers, the real world impacts on higher cost, and why it matters. Okay, so this is a breakdown. I know I've done some videos as the legislation was passing, but I want to provide some key top line highlights in the next 5 to 7 minutes. I'm Catalina. I'm the founder of LoanSense. 91% of viewers of our channel are not subscribed. So please do so. Hit the notification bell and share this if you find this to be helpful for anybody you may know. So what's changing and why it matters? July 4th, the Congress signed the One Big Beautiful Bill, which overhauled the federal student loan program. It's scrapping income-driven plans like Save, Pay As You Earn, and Income Contingency Repayment and replacing it with literally just two options: the revised standard repayment plan and the new Repayment Assistance Program, which extends payments for 30 years in order to get loan forgiveness. So it did not touch public service loan forgiveness and allows that continued 10-year timeline to exist. So now let's talk about key timelines and what borrowers need to know most. Starting July 1st of 2026, new borrowers will only have access to the Repayment Assistance Program and the revised standard plan. The revised standard plan is revised because it's no longer just a 10-year plan. It has been stretched out based on people's borrowing amounts. So based on how much they borrow when they exit school, based on that amount, their timeline will be extended for 10, 15, 20, 25 years. Okay, existing borrowers can remain on older plans until July 1st of 2028, which means if you're an income-based repayment, you will have access to that, but you have to enroll into that before July 1st of 2028. Otherwise, you'll be automatically rolled into the Repayment Assistance Program if you do nothing. So we encourage all borrowers on current income-driven plans to self-enroll and not wait for the government to do it for you. Third, bigger picture, right? Caps, costs, and access. The legislation introduced strict borrowing limits, including $100K lifetime borrowing limit for graduate students, $200K for professional degrees like the MBA, lawyers, doctors, degrees of that nature, and $65,000 for Parent Plus loans. That means that parents cannot borrow more than $65,000 for their children. It's critical that Parent Plus borrowers know that they lose access to income-driven plans unless they consolidate and go into an income-based repayment by July 1st of 2026. So basically, Parent Plus borrowers who we've already worked with, who did the double consolidation with us to get access to other plans outside of ICR, you're covered. Anybody who is enrolled in ICR will be eligible to move to income-based repayment as long as they do so before July 1st of 2026. This is an urgent call for Parent Plus borrowers who do nothing. You will lose all access to any type of payment relief or programs that give you payment relief like the Repayment Assistance Program. Parents lose that. So what does the Repayment Assistance Section 4? What does repayment assistance really mean for borrowers? Payments under RAP, it's called Repayment Assistance Program, based on your adjusted gross income will range from a minimum of $10 up to 10% of your adjusted gross income with forgiveness after 30 years. Unlike previous plans, there's never a $0 payment and there is no upper income threshold, meaning you can owe more sooner based on your income, okay? So the real world impacts are there's higher costs, there's no income cap, and people could see spiking payments, especially since people have not certified their income in years, and financial strain may increase, as well as not just the amount but the time length in which people have to pay. Why does it matter? Millions of people aren't saved now. They're feeling the heat of the interest resuming August 1st. So the restoration of lower payments is halted and borrowers can see their payments jump. So what are the call to action here for LoanSense? Number one, I have a video I will point you to that posts pro tips and hacks on how to avoid a spiking payment of 2 to 3 times. Please watch that video next. It will be available at the end of this video. And to really understand what plan is best for you, what plan of action is best for you, and how many more payments you need to pay in order to be done, so that you know if the change of plans will be affecting you in 2026 to 2028. I hope this has been helpful. If so, please like, subscribe, and we can't wait to come to you with more content. Okay, this is going to take a while to send to you because I'm just going to do a second cut right here, okay? I'm going to try to make it more streamlined and less okay. So here we go. Starting next year, millions of student loan borrowers can lose access to their current repayment plans whether or not they like it. This means tens of thousands of dollars more could be locked into up to 30 years of payment. Imagine logging in to check your balance only to see that your monthly bill has now tripled. This video will show you exactly what's going on, who's infected, how to protect yourself before the deadlines hit. Okay, it's really important. We will be reviewing the One Big Beautiful Bill. So the sections of this video include what changes are occurring, why it matters, key timelines, the bigger picture on caps and cost, and what the Repayment Assistance Program really mean for borrowers, as well as the real world impact of the higher cost and why it matters and what you can do, your call to action, okay? So what's changing is basically the government, through this legislation, is scrapping all income-driven plans, including Save, Pay-As-You-Earn, and Income Contingency Repayment for parents. It replaces them with just 2 plans. The Standard Repayment Plan, which is a revised version that will allow people to pay for more than 10 years based on the amount they borrowed. The second plan is the Repayment Assistance Program, which stretches repayment terms to up to 30 years. Luckily, they did not touch public service loan forgiveness, so you can get your debt forgiven at a quicker clip with public service loan forgiveness still. So, second, the timeline. Starting July 1st of 2026, new borrowers will only have access to the Repayment Assistance Program or the revised standard plan for new borrowers. Existing borrowers may remain on their old plan, but they must choose to do so by July 1st of 2028. Otherwise, they will be automatically enrolled into the Repayment Assistance Program unless they opt into income-based repayment. There's a couple income-based repayment, the old and the new. I have a video that breaks that down. I'll make sure to link it. What's the difference between old income-based and new income-based repayment? So, I urge you not to wait for the government to enroll you into repayment assistance, especially if you are midway through paying your student loans. Do not let them switch you because you will automatically be enrolled into a 30-year plan. You do not want that to happen. Number 3, okay, section of our video, bigger picture. What are the caps, costs, and access? There is a $100,000 lifetime borrowing limit for graduate students, $200,000 for professional students like lawyers, doctors, MBAs, and $65,000 for Parent Plus borrowers. Why the cap for Parent Plus borrowers is significant because it's the largest amount of increased borrowing as of the last 5 years, and parents will have a cap and they will lose access to all income-driven programs if you do not, if you are a parent and do not consolidate and switch into income-based repayment by July 1st of 2026. Those whom we work with that did double consolidation, you're covered. If you're a parent watching this video and you are worried about the increasing amount your payments are and you have not enrolled into income contingency repayment prior to this, we encourage you to contact us ASAP so we can help you do the right paperwork so that you can be qualified for a lower payment, not just now, but in the future. Section 4, why does a Repayment Assistance Program, what does it really mean? Okay, that's what the section is. We call the Repayment Assistance Program RAP, by the way. The payment under RAP is $10 a month minimum, up to 10% of a person's adjusted gross income with forgiveness after 30 years. Wow. Unlike the prior income-driven plans that allowed people to pay for 20 to 25 years, it's now stretched to 30 years. So there's also no more $0 payments. So it's important that if you qualify for other plans that you switch before the government auto enrolls you into something where you have to pay for 5 to possibly 10 more years, okay? 5, what is a real world impact? There is no cap on your payment under repayment assistance, which means as your income goes up, your payment goes up. There is no cap. That means a dramatic spike in monthly income. If your income goes up, there's a spike in your monthly payment. I have pro tips on how to avoid that tax based on submitting proof of income from prior years. If you have not watched that video, check it out here so you can prevent payment spikes. So why does this matter? Because a lot of people are feeling the heat from SAVE that interest kicked in August 1st of 2025. If you are feeling the heat, your income has risen by multiple fold since in the last 5 years since you were required to pay your student loans, we can assist you. There is really no halting or moving forward, just making sure you have the right actions and plans. We're here to help reduce your payment, help you come up with a payment plan that best meets your financial goals, and help you manage your program, as well as even public service loan forgiveness if you are trying to get forgiveness through that program. We also have an entire section on borrower defense. If you qualify for that, please watch our library of videos so that you can get assistance with that 21-page application. Again, 91% of you viewing are not subscribers. Please subscribe and share for those whom this may be relevant.